Hello, this episode of the Weekend Chart Prep is being brought to you by the Smart Money Manuscript. Hello, my name is Timothy Lee Raj Sr. and I'm the creator of the Smart Money Manuscript. But Tim, what is the Smart Money Manuscript? The Smart Money Manuscript is your roadmap to financial freedom. Inside this powerful course designed to transform your financial future, I've meticulously condensed over 1,000 of my public YouTube videos into 40 highly efficient lessons that span just 2.5 hours. This course is strategically designed into 4 phases to help guide your learning in the most logical and effective way possible. Phase 1 lays the groundwork, covering essential financial literacy like budgeting, banking, and taxes. In Phase 2, you'll move beyond the basics, learning about brokerage accounts, figuring out how much you need for your own individual retirement. You learn about how to do fundamental research on companies, and you'll also learn how to conduct technical analysis by looking at stock charts. Phase 3 empowers you to build a robust portfolio and leverage your capital using advanced techniques like options and futures, and it also teaches you the importance of backtesting your strategies. Finally, Phase 4 takes a deep dive into the advanced ICT concepts, giving you a professional edge. Each lesson includes a short quiz to help solidify your understanding. By the end of this journey, you'll have the confidence and tools that you need to make intelligent investing decisions, manage your money without fear or ambiguity. So if you want to be a long-term buy and hold investor, if you want to be a swing trader, if you want to be a day trader, if you want to trade stocks, if you want to trade options, if you want to trade futures, the Smart Money Manuscript is for you for $69.99. Yes, $69.99 for all of this here. What's going on, everybody? Excuse me. Y'all doing this evening, man? Hopefully y'all had a good weekend, man. Hopefully y'all had a good weekend, baby. I ain't gonna hold y'all up too long this evening, man. I'm about to get ready to do my little weekend chart prep. You hear me? Do my little weekend chart prep. I can't see the screen over there on IG, but if it's anybody on IG, go over there to youtube.com/the-new-TLR so you can see the screen for real. Or you can just hang out there on Instagram. Let's go ahead and get to it, man. How y'all been doing? How was y'all weekend, man? Had a good weekend. Holla at your boy. Let me know what's going on, man. How y'all weekend going? How y'all do anything interesting? Did y'all glean anything from the live streams that we did this week? Too short, man. All my weekends too short, man. Every time I turn around, the boss want me back at work, man. It's time to go back to work already tomorrow, man. Hey, man. Did y'all learn anything this week? Let me turn on my fancy dance and go ahead and get to it, man. Shout out to everybody that's yes, yesterday was amazing. Get that Smart Money Man. Speaking of the Smart Money Manuscript, man, this is being brought to you by the Smart Money Manuscript, right? Smart Money Manuscript is a little course that I put together myself. They say it's a pretty nice course, and it's $69.99. The first link in the description below will get you into the course. And I think the most valuable part of the course is every second Saturday, we get together and we go over individual questions that someone may have. And that's when the magic happens, man. People ask questions. He's still not feeling well. He has the flu. This morning I got up at like 7, checked his temperature. It was like 102.2. I gave him some Tylenol. And I told him I was going to come back and give him his Tamiflu and check his temperature again before I went to morning service. And then when I got ready to leave, I checked it, and his temperature had dropped down to 100. No, it was 101. It was 101.6, so it had come down a little bit. And then, but he was up. He was like he felt better. And then when I came home from service, he was looking better, feeling better. And but it was still like it was still like 100. It was still like 100.8. It was like 100.8, but it still had a pretty high temperature. And then he ended up laying down and going to sleep. And so he's been asleep for like a few hours now. I keep trying to get him to get up and eat something, but he'd be like, not right now, not right now, not right now. So I'm just having him like stay hydrated. And then this evening, I gave him some more Tylenol this evening at about 7 o'clock. Right. Just trying to keep him hydrated and trying to, you know, see if we can maintain that fever. But he doing last night he had a chill. I don't think he got a chills today. Last night he still had the chills really bad, but I don't think he got the chills today. So I'm hoping by tomorrow he'll be like on the edge of the wood line. Right now he's still kind of far in the woods right now. I'm hoping by tomorrow he'll be on the edge of the wood line, and then by Tuesday he'll bounce back. Cause this the start of they winter break, man. The man starting the winter break off sick. Starting off sick. Appreciate it. You know, God is good. He gonna pull through. Um, yeah, man. Smart Money Manuscript. Y'all go check it out, man. Every second Saturday at 12 p.m. we get together and do a Q&A. And yesterday, I think we made magic yesterday. Um, Based off what we've been talking about and what we've been doing, um, I've been flirting with the idea of doing like a month-long mentorship. But um, if I do decide to do it, nobody in the gang is allowed to purchase it. Y'all banned from buying the and I can do that. I can on WAP. I can tell it what people can and can't buy stuff. Right. It's not going to be something for y'all to purchase because you already got all the information. You already got access to me. There's no need for you to spend additional dollars on mentorships. I'm already mentoring you. There's no need to feel FOMO, like, oh, if Tim's doing another mentorship, I'm missing something. No, you're not. You're not. Okay. So if I do decide to do it, I'm letting you know now. I'm flirting with the idea of doing it. If I do decide to do it, you're not going to be allowed to purchase it. You're not going to be allowed to purchase it. Now, welcome, everybody. If this your first time tuning in to Tim's Tidbits, allow me to say welcome. If it's not your first time tuning in to Tim's Tidbits, I still want to say welcome and give you a nice hearty thank you for always tuning in to Tim's Tidbits. If you don't know me, I'm Timothy Lee Rogers Sr., aka Arania Grande. I'm just some guy from Fort Lauderdale, Florida that learned something from another guy from Maryland named Michael. And now I'm out here on Al Gore's internet sharing my understanding of his life's work. Why did I decide to do that? Because his life's work has changed my life. It has changed my life. It has given me access to something I never thought I would have access to. I'm like, they didn't teach this stuff in Fort Lauderdale, Florida, man. So I'm out here sharing what I've learned, right, with anyone who's willing to listen. This is our monthly chart on the NQ. This is the March contract. If you notice in the background, it says NQH 2026. This is the March expiration contract. For those who don't know, there are 4 expirations for the futures contracts. It's the same 4 months every year. The only thing that changes is the year. It's always March or H. It's always March. I ain't got my count in March, June, September, December. I think that's right. right? March, June, September, December. So March, 1, 2. Yep, 1, 2, 3. Yep, 1, 2, 3. Yep. March, June, September, December. Those are the expiration months, or H, M, U, and Z. It'll be the ticker symbol, NQESYM, whatever ticker you're trading, right? Then H, M, U, or Z for March, June, September, and December. This is the June expiry, expiration, even. Okay. All right. Looking at the monthly chart, thus far in December, we have traded down into a discount of the prior month's like range, if you will, right? Because when we look at algorithmic time intervals, right, you can put everything into quadrants, right? So based off of last month's dealing range, right? Because when you come into a new month, you come into a new day, you come into a new hour, you can utilize that prior dispensation in time, right? As a hit the wrong button, as a dealing range, right? And you know how we be looking at our prior month's high and low, right? There to there. Right? We dropped down thus far into a discount of that prior month range, and we're starting to move back up. Prior to that, we had dropped down, right, into a discount of our range after leaving this balanced price range right here, right? We had this breakaway gap that we was talking about. Want to see that, remain open. All right. We had a volume imbalance down here on the monthly chart. All right. We didn't make it to the volume imbalance. Didn't make it to the breakaway gap, but we did come down, went too far, into a discount of our range, right? After leaving this balanced price range. So last month we pulled down into a discount of the range, right? We took out sell side liquidity below the prior month. Remember, we talked about going into a new month, right? We look at the range of the prior dispensation in time. So we came down to a discount, swept out liquidity because it would have been sell side and buy side. Then got a nice discount sensitivity after sweeping that sell side, after coming into a discount of the range. This month so far, we opened up and we dropped back down to equilibrium of that range, came into a discount of November. Couldn't think of the nuts. Came down here, dropped into a discount of that range, right? Started moving back up. As of now, we're still having a inside month right now. We still have 1, 2, 3. No, 1, 2. I got to go look at it. 3, 4, 5, 6. We looked at this. My brain bad. I'm gonna have to look at it again. All right. I got to remember to start closing tabs because I'm gonna be done dox myself one day. Wrong thing. I'm gonna be done doxed myself one day. All right. So it's closing at 12:15. So no trading Wednesday or Thursday. All right. So no trading Wednesday or Thursday. All right. So we got 1, 2, 3, 4, 5. I think 6. Let's check the first. All right. So all right, close. All right, closes at 4 on. All right. So yeah. Okay. So we got 1, 2, 3, 4, 5, 6 more trading days left in this month. This week is a short week, no trading on Wednesday or Thursday. Now, Globex will be open like for like the Asian session, London session. That's gonna open up, but for the New York session, no trading on Wednesday or Thursday. If you trade like the Asian in London and you wanna, partake, hey, be my guest. But you know, hey, I won't be partaking. All right. So, like we said, thus far we having an inside month, but we do have 6 trading days left to see if we can get that Santa Claus rally. And like I say, they Santa Claus rally is typically like the like end in December, going right into the beginning of January. That's typically the Santa Claus rally. Don't quote me on that because I don't really stress about it or worry about it. But if I'm not mistaken, that's what it is. Let's go over here and ask my friend Gemini and see what Gemini says about that. What days are the Santa rally on for U.S. stock market? Santa rally generally on the last 5 trading days of December and the first 2 trading days of January. So it's typically that last week of December going into, so the last 5 trading days. And what we said, we got 6 trading days left, right? So looking at uh 1, 2, 3, 4, 5, and then so what was the holiday for uh the New Year? Let's look at the New Year one more time. Then the New Year. All right. So already, so close Wednesday, and then it opens up Thursday at 6. Right. So it open up Thursday at 6. Okay, so no trading on. So that'll be Friday and Monday. Right. So last 5 trading days of December, first 2 trading days of January. So that's Tuesday. That's Tuesday, the 23rd. So the 23rd this year, that is, it'll be the 23rd, 26th, 29th, 30th, 31st, then January 2nd and 5th, because that's the last 5 trading days and the first 2 trading days of January, according to Gemini. I know just from memory, I ain't gonna say no, but I remember from, when I used to really track that stuff. It was like the end of December, like the last week of December. That's what was sticking in my mind. And now Gemini then said that according to the Stock Trader Almanac, I remember if I was on camera, I would go find that book in my closet and show y'all. I used to buy this book like every year. Especially when I first started watching EYL, I used to buy this book every year. Boy, look at here. You couldn't tell me I ain't have a gym, boy. But all the stupid stuff I used to use. And then now, all I do is just look. I don't use nothing but these candles right here. That's all I use, not these candles. All the dumb stuff I done spent money on over the years. Anyway, squirrel. Somebody said I got the PDF for free. I hate you. I paid money for them. All right. So, all right, that's what we had on the monthly chart. No need to move our monthly high and low because we still got that based on last month, right? Our monthly high and low is still there. No need to move it. I still got it hid because um we still got a ways to go. And I just be, I don't like to have a lot of stuff just showing on my chart for just to have it on there. I like to try to keep the chart relatively clean and try to show what I need to show. Speaking of show what I need to show, who was in the Smart Money Manuscript um Q&A yesterday? If you was on the Smart Money Manuscript Q&A yesterday, say me or put me in the chat. Jada need to be. Jada was the one who got me on the topic. I wish Jada was in here. Me, Joe. Joe said me. Joe was in here. Joe said me. It'd be crazy to me how y'all can't see that Zoom stuff when it pop up on the screen. I wonder why Zoom do that. Here to learn and share was here. Y'all got any takeaways from yesterday? But I thought about it because I like putting stuff on the chart, only having stuff on the chart that's needed. Y'all got any takeaways from yesterday? What y'all learned yesterday? Share something y'all learned with the people yesterday about uh share a takeaway that y'all got yesterday about the stuff on the chart. On the why you putting PD rays on the chart? That's what we're talking about. Man, why you putting that PD ray on the chart?
For me, it was that the 20-day look back, even if it's not necessarily the same as the dealing range, is still relevant when you mark out the quadrants and how it still relates, how the algorithm still respects both the dealing range and the look back.
Yes, yes, for sure. Because the algorithm, it's a quantum computing piece of machinery. It can think about so many different things at the same time. Like it be thinking about so many things at the same time. And it's amazing how it can remember the quadrants for the 20-day look back, the quadrants for the dealing range, the quadrants for the session, the quadrants for this candle, the quadrants for that fair value gap, the quadrants for it remember all this stuff and it just places stuff right in on these quadrants so beautifully. You be like, whoa, 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 whoa. How did it do that? You know what I'm saying? You ain't lying, man. Understanding why you reaching for that tool. Why am I putting this on there? Am I putting this fib tool on here because that's a 20-day look back? Am I putting it on there because that's a monthly range? That's a monthly candle? Am I putting it on there because that's a session? Am I putting it there because I know he'll learn to share? I ain't typed out a dissertation. Like a fun to read. But you know I'm shy and I don't like to get on the Zoom and talk. uh, uh, okay. For those who not looking at the YouTube chat, here learn and share said, my takeaway was about not marking the upper wick, but waiting to see the area we pass would act as support. I thought I needed to watch the wick as resistance. I'm glad you said that, right? Uh the way I mark my charts is not the end all be all, right? You mark your charts for whatever reason makes sense in your mind. The one thing I try to hammer home all the time is why am I marking this? As long as you understand why you're marking that, mark away. You may not be marking something, you might not be watching the same thing I'm watching. But if you understand why I'm grabbing this Fibonacci tool and stretching it here, you know the reason it's there. and you have a reason for putting it there. So until the reason you put it there becomes validated or invalidated, right? There's nothing wrong with putting it there, even if I don't choose to mark that, right? But we don't want to mark everything, because if we mark everything, remember yesterday when we had the 60-day look back, the 40-day look back, the 20-day look back, the dealing range, the session dealing range, the bullish dealing range, the bearish dealing range. We had all those Fibonacci's on that turned on at the same time. And we like, what in the world are we supposed to be looking at right now? And that's why you don't want to mark everything. You just want to mark specific key PD arrays. And when time meets price, then you start looking for signatures and you start looking for entries if they present themselves. All right. Y'all, man, if y'all didn't tap in, man, make sure you go watch the replay before I delete it. Hit Learn and Share said you can actually download the replays. So make sure you do that. If it won't let you download it, make sure you screen record it, because I'm going to delete it one day this week. I typically used to delete them like now. Now that the week has started, I usually like delete it, but I've been leaving them up to give people a little bit more time to enjoy their weekend and then go back and, rewatch and take notes and stuff like that. All right, man.
Since it's the holidays, why don't you leave it up all week for us?
First time I ever seen download as an option. I ain't gonna hold you. The last time I left the last one up there almost all month. It was up there for like ever. I was like, oh, I never went back and took that down. It was like up there forever. He'll learn. She said you can download it. She said you can download it, but I'll leave it up. I'll give it some time. It's like, Christmas, 'tis the season to be jolly. I give it some time. I leave it up there, But like she said, you can download it. So go ahead and download it. But I'll leave it up there. I ain't gonna take it away just yet. And for those who don't know, if you go into WAP, speaking of going to WAP, y'all shout out JT, man. JT finally got the WAP together. JT finally got his WAP together. JT is in the Discord again. And we figured out the problem was when he was signing up, he signed up with a different Discord. So the Discord that he was signed into and using originally, it was when he originally signed up for the Asian Assassins. Somehow when he purchased it, and I know of many people who's done this, they have one Discord on their phone and they have a different Discord on their computer, right? And they don't know that they have different Discords. Either they forgot they made one, or, what I'm saying, they thinking they signed into the same thing or whatever. And so yesterday when he finally got it connected, I said, well, wait a minute. That's a different JT. You know what I'm saying? That's something totally different. And when I go into the Discord now, it's two different JTs. One got all the access he's supposed to have, and one just has the access from like what he got 6 months ago. So the mystery is solved. He back in here, man. Y'all give it up for JT, man. JT been struggling trying to get in there and been driving me crazy. I ain't gonna hold y'all. I'll be like, boy, I ain't got no customer service. I ain't got no, y'all know I be getting my patience be short. I'm like, I don't know, man, why you can't get it? Should be there. Why you don't see it? I'm like, it's right. I'm talking about we going through screenshots. I'm going through, he talking to the chat. I'm talking to the chat. I'm talking to him. I'm sending screenshots. He's sending screenshots. I'm like, I don't know what this thing doing. And then, we was able to get it handled yesterday. Y'all probably gonna see a whole lot of that in the video too from yesterday, because we were doing it in the middle of the recording. But all of that, if you come to the SMM Live, right down there where it says past recordings, that's where the replay is going to be. There, you don't have to go inside the Discord. You don't have to go look for nothing. All you got to do is sign into your WAP. Come up. Don't go into the Smart Money Manuscript. Right. Speaking of Smart Money Manuscript, 19 videos, 19 questions. 19 quizzes. Help you. It starts out with the simple stuff like budgeting and banking, go all the way through the advanced ICT concepts. Right now, they're having some kind of glitches with their website that they don't seem too pressed about fixing. But when you go in and take the quizzes, it'll let you take them, but it won't grade it for you. I don't know what it's doing. I've reached out to them multiple times, and they just say that they're working on it. But you come into the SMM live channel. That SMM there stands for Smart Money Mentorship, right? And you'll see past recordings right there. When you click on it, we was on there about 2 hours, right? I can't remember exactly when we started because it was a lot going on in the beginning, you know what I'm saying? But it's a lot of meat and potatoes in there. All right, meat and potatoes. That's where it is. All right, back to what we was doing. Let's mark out last week's high and last week's low, right? Like we always do it this time, right? So we got our weekly high, weekly low. Now looking at our weekly, right? We were looking at our monthly, right? When we talked about our monthly time frame, remember what we said? After leaving this balanced price range on the monthly, we traded up and we retraced back down into a discount on the monthly time frame. We said that we swept out monthly liquidity, right, on the monthly time frame. Now we're looking at a weekly chart. Right now, the weekly chart is doing what? The weekly chart is giving us a little bit more detail about what was happening on that monthly time frame, right? Because remember, on the monthly time frame, that's what we talked about. See there? We said we came down into a discount after leaving this balanced price range. We went up, right? Came down, right? So this was our monthly. This was our month. That was the when we're leave. Let's just do this right here instead of doing that. Comes around monthly time frame here. Right there. Get out of the way, lines. Yeah. All right. So that's our monthly range right there that we were watching. That was, after leaving that. Here you go. After leaving that balanced price range, we came down to a discount, swept out that monthly low right there. That was the monthly low. Oh, there. Now let's go back down to the weekly. Boom. See there? See how the weekly gives us more detail, right? So now looking at the weekly time frame, right? We get more detail. All right. We expand it up here. Boom. Made that high. Now on the weekly time frame, look here, we left another balanced price range there on the weekly time frame. On the monthly, right? This was our balanced price range down here on the monthly. Okay. We don't want to see price coming down here off the monthly time frame, right? We expand up on the weekly time frame. This is our balanced price range right here. We don't want to see us losing this. Okay. We don't want to see us losing this. Excuse me. And then if we notice here, right? If we notice here, this right here is our quadrant level, right? This is our quadrant level. All right. Let's go ahead and, you know what what used to kill me back in the day when I used to be watching people live stream, right? And they used to all be like, "Oh, I ain't gonna give y'all too much sauce. We talked about this in the Discord, so I can't give out too much sauce right now. I can't." whoever, whoever said, y'all ever seen people on their YouTubes back in the day where you see how like I'm setting this up right here, what made me think about it? I was about to say, hey, let's set the quadrants the way we say you're supposed to watch them, how we was talking about in the live stream, whatever. They be like, oh, I can't give y'all too much sauce. Y'all want that sauce, y'all got to join the Discord. If you ever heard somebody say that, put a one in the chat. If you ever heard somebody say, hey, if you want that sauce there, you got to come, you got to join the Discord. We can't give out too much secret sauce. Man, if y'all get off YouTube with this foolishness, they be trying to bait you in to pay $100 a month for their Discord. They be wanting you to pay $150 a month for their Patreon. All right, so now we all understand, right? We always talk about when we anchor our Fibonacci tool, right? Why are we anchoring? I'm talking all by myself. Somebody talk to me. Why are we anchoring our Fibonacci tool from this high to this low over here? We anchoring it because what? Right? What are we looking for? Huh? Talk to me. Somebody tell me. I'm talking too much by myself.
We're looking at that area where it left that balanced price range and expanded up.
Yeah, we already said that, but I'm saying, why are we anchoring the fib tool? What are we looking for here with the fib tool? We're looking for what?
Quadrant and high probability areas where PD arrays could form.
Yes, there you go. That's what I'm looking for. We're anchoring our fib tool from this high to this low because since the algorithm did this, whatever that this is, right? In this case, this is an expansion, right? We did this expansion beyond this balanced price range right here. So now, because it did this, we can anchor our fib tool here, right? But we're looking at our fib tool to utilize it from this candle on, right? So we're looking in the future at these quadrant levels for trading opportunities, and we look back at in the past on these quadrant levels for confluence. Okay, we're tracking. I'm gonna keep saying it until y'all understand it. I'm gonna hammer it home. You hear me? I'm sipping on some high quality H2O right now. Right, so that's why I moved the fib here, right? So to help you visualize, where am I supposed to be looking to use this fib? Where does the fib come into play? Right? So if we look here at these quadrants on this weekly time frame, we'll talk about is giving us more detail, right? So if we look back, now that we know this, all right, let me put a vertical line here, right? So we know where the fib tool, everything to the right of this is when we're looking forward for opportunity, and everything to the left is when we're looking back for confluence, right? So now let's extend this in both directions, right? Going to extend it in both directions, okay? So as price is dropping down, right, as we come down, we come very close to that quadrant level, but we fail to do so, right? We fail to do so. Now, let's take a line tool, right? This is how you want to go back and study price, just like this. You ain't got to do it exactly like me, but if you do it like this, you'll understand it the way let Tim Roger understand it, okay? Because this will make sense in my mind. Click there, right? And then I'm going to bring this back until I run into something that looks like a PD array that makes sense to me, right? So I'm going back like this right here. Boop! I hit something right there, right? I hit something there, right? But before I hit something there, I hit it. Boop! I hit something there. Boop, I hit something there. Boop, I hit something there. Right? Boop, I hit something there. Right? So all up inside this little consolidation area here, right? I'm hitting PD arrays. Right? Okay, let's go back and see. Right here. Somebody tell me what PD array this is right here. What is that PD? What matter of fact, let's start here first. What PD array is this right here? And either one, I'll take either one of these two, this one or this one. Right?
Okay, he got a busy and the void. I forget the void.
Liquidity void.
Liquidity void, yeah.
Yeah.
And the busy.
And a busy, yeah. Volume imbalance, liquidity
That's
void.
what I meant, volume
busy.
imbalance. I meant to say
Right.
volume imbalance.
Volume imbalance, liquidity void, busy. What's this PD array right here?
So order block.
Order block, very good. What's this PD array right here?
Is that a mitigation?
Mitigation block, very good. Up, down, up, right there. Don't take out the low, okay? It's inside consolidation. You ain't got to always look for it, but it is there. We're moving, we're moving, we're moving, all right? All of these PD arrays right here, where are they resting at?
25%.
Yeah, the lower quadrant, right? It's resting at the lower quadrant. All right. We said we're looking from this vertical line that way to look for trading opportunities on the quadrants, right? We look back to look for confluence at the quadrants, right? So if price is coming down here, okay, and we fail to make it to that level right there, but we run into something that should be used as support, where is the support going to be resting? At these quadrants right here. Why? Because we're looking back for the confluence or the support. And it can be support in the form of resistance too. You're looking for the confluence, right? The supporting cast. Everybody wants to look at the leading man or the leading lady for the Oscar nomination, but the supporting cast is also important, right? So we come down, and not only do we come down into a discount of our range, right? That's equilibrium of the range. We come down into a discount of our range, but we come into contact with PD arrays that are coming into contact with that lower quadrant, right? So we come down, we sweep liquidity, okay? Come down to a discount, sweep liquidity, hit an anticipatory reactionary point in line with the quadrant, then we get that discount sensitivity, and then we rally all the way back up, right? And we come up above the upper quadrant there. And once we get to the upper quadrant, we start to pull back again, right? We start to pull back again. Now, what do we notice right here at this quadrant level right here? This candle there that dropped down and took out this liquidity, right? Once we trade it back above that price right there, right? Just for the sense of this 1 week there. Now, true, you have all these consecutive candles there, right? But just for the sense of this 1 week there, when we trade above that price there, we're creating a potential order block in line with a quadrant level. Now, this level is very magical because when we drew this level, that candle didn't exist, that candle didn't exist, that candle didn't exist. But for some reason, the algorithm knew that that line was there, and it had a weekly candle come down into a discount, sweep liquidity, hit a support level, and then the next week came back up offered the change in the state delivery, creating a bullish order block in line with a quadrant level, right? And when we look back, there's another bullish order block in line with that quadrant level. And when we get up to this quadrant level here, we retrace back down into that bullish order block, touch just below equilibrium, and we see discount sensitivity again, right? All based off of these quadrant levels. And when we're looking for our highest probabilities trade opportunities, they're going to happen in between the upper quadrant and the lower quadrant of our range. No matter if it's our 20-day look back, no matter if it's a dealing range, no matter if it's a order block, no matter if it's a fair value gap, no matter if it's even the range in between our quadrant levels. Even if we come in between our quadrant levels, right? Even if we come in between our quadrant levels, right? Then go down. Let's go down lower. Right. The daily time frame really ain't low enough to give a good. Let's go down to 60. 60 minutes is give you more detail. Do you see what I see? Do you see what I see? I can't make this stuff up. But do you see what I see? Do you see how the algorithm creates a CB at this quadrant right there? And then it uses that CB to take us down to that lower quadrant. And then we come back up into a CB that was on that quadrant again. And then it takes us all the way down to the low or the next quadrant line on the higher time. And as it came down, it got a civvy and a civvy on these quadrants. And when it started to go back up again, it made a busy on that quadrant right there. And all of this right here, it used it as support. And all of this right here, it used it as support to take us back up on out of there. Off these quadrants in between the quadrants.
Don't quit the day job. Don't quit. Don't quit.
Can't make this stuff up, man. I can't make this stuff up, man. And that's just free from me to you. I ain't got nothing to hide. We talk about this all the time. That's just some of the stuff that's just a little taste of the stuff that we was talking about in the Q&A over the weekend.
It is crazy, man, how the cameras go right to those lines. But
I told you it's a magical Fibonacci tool that I got off Amazon.
oh, y'all got the cheat code.
Magical Fibonacci tool that I got off Amazon for the low price. $19.99.
I couldn't have been $19. Everybody had it.
You know what I'm saying?
What them crystal ball sold, like, give us the address.
So yeah, that was our weekly. You see what we came in weekly, and we came down to we swept liquidity, came down on the weekly. So right now, the higher time frame is respecting bullish order flow. Like we have been talking about the high time frame respecting bullish order flow for a really long time, right? We retrace back down, we move back up, right? We retrace back down, we move back up. We're respecting bullish order flow on the monthly. We're respecting bullish order flow on the weekly, right? A poke above that high right there, right, would give us a little smiley face down here on the weekly time frame, right? So when this candle here closes, right, if we close, right, make a swing low here, no matter if we take that out or not, we technically already got a smiley face, right? But y'all know I like to see us poke above that high, right? Show that continuation, right? I want to see that low, that low, that low, then poke above that high to give me that good confirmation, right? That he's wearing a crown. I got a crown on my head. You know what I'm saying? I like to see that good confirmation, the desire to want to keep going up. All right. But and for those who don't know, that would just be an intermediate term low right there, right? You got a swing low with a swing low to the left and right that's higher of it, right? Short-term low there, short-term low there, short-term low there creates a intermediate term low, and he smiles because he's important. All right. Daily time frame, right? Still respecting bullish order flow. All right, respecting bullish order flow on the daily time frame. We've already manipulated out the low. Like I said here, I like to see the poke above there, but since we have a swing low there already, right, with this candle, this candle, this candle, right, we got the swing low. So technically we already have, I'm gonna go to this one here because it's more, that one is way up there, but you can use that if you want to, but this one is more in the overall structure of how price is moving. That's why I jumped all the way over there to him, right? Because this came down and took liquidity, right? This came down and took liquidity, then this came down and didn't take the liquidity. So I'm looking there, there, and there. I smile because I'm important, right? I just like to see that poke above there, but it's technically is there after the close of the 18th. That Thursday closure, right, that gave us a swing low, right? And then Friday, we just continued up, showing the strength that you could already anticipate based off of that. I smell because I'm important. All right. So bullish order flow has been the theme for the higher time frame. Now the monthly, weekly, and daily all still showing their respect and bullish order flow. So, you know, and right now for the did we trade above the weekly and the daily high already? Am I tweaking? No, I'm not. We did. So that's the weekly high. Yep. We traded above the weekly and daily high already. That's the weekly high. That's the daily high. All right. So we starting out just going straight up. Y'all know what we say. When we start out Sunday going straight up like this right here, right? There's not even a lower wick on this daily candle right now. So when we start out, oh yeah, there's a piece of a little wick. When we start out just going straight up like this right here, either this week gonna be extremely bullish or it's gonna be bearish. And so we just talked about, they said the last 5 trading days of December and the first 2 trading days of January is typically the Santa Claus rally, right? Now, let's go back and look to see if we got a Santa Claus. Who remember if we got a Santa Claus rally last year? Did we get a Santa Claus rally last year? I don't remember if we got a Santa Claus rally last year. I don't think we did. I don't think we did, but let's go check it. Let's go to the NQ continuous chart. Let's go to the NQ continuous chart, put it on a daily time frame, and let's go back to December. Going the wrong way. 2024. So the last 5 trading days for December, no trading on them days. So it would have been 1, 2, 3, 4, 5. So around the 23rd through the 3rd. All right. Let's go back and look at that. All right. So the 23rd. Nope, we didn't. We didn't. All right. It's 23rd. All right. And then it's January 3rd right here. Right. So we didn't get no, we started going to the 23rd, we started going up. We started going up, and then the market closed on the 24th. Right. The market closed these days right here. And then the 26th, it opened back up and it was a down day. And then the 27th, down day, 30th, down day, 31st, down day. And then when it opened back up on the 2nd, down day. And then the 3rd, it had an up day. So we did not get a Santa Claus rally last year, right? It was all down. So you got the 23rd, it went up. Then the next 1, 2, 3, 4, 5, 1, 2, 3, 4, 5 trading days, all down. So we got a we got a Santa Claus rug pull last year. All right, and let's see where we was at last year. Let's look at the daily chart, right? So last year, right, price had expanded up, then it came back down, and then it was coming back down to a discount, came down to the order block, right? On the 20th, we came down to the order block on the 20th. We traded back up, right? And then we dropped back down again right there. So we were moving there. All right. So do this right here. Come here, you. Put you there. Uh-oh. Hey, yo, you. Put you down. Put you down. Hey, yo, you. All right. This is last year. We're going to let's look at December. All right, December. Let's look at December. All right. Oh, yeah. All right, so December price action for last year. All right, December price action for this year. All right, so last year it was a little different. Okay, so last year in December, we made all-time highs in the middle of December. We made new all-time highs. All right, if we squanch up the chart, see that? This was the all-time high right here from November. So we made new all-time highs in the middle of December, and then price start to pull off, right? New all-time highs, got a breaking market structure here, bearish breaking market structure there, right? Along with a SIBI at the breaking structure, traded back into the SIBI, right? Traded back down, tapped lower, traded back up into the SIBI, back up into the inversion fair value gap, traded back down, lower, right? Came back up, manipulated out the highs, did not take out that high, right? Once we came down here, right? Broke below there, right? We created a smiley face there, right? Traded back up, manipulated those highs, did not take out that important high and dropped, right? So last year in the middle of December, we made all-time highs and start to pull back, right? Even though we was in a buy program, we made all-time highs in the middle of December. This year, right, we made all-time highs all the way back in October, right? So in October, we made all-time highs, came back, manipulated the lows, and now we're moving. We're back in a buy program, right? We're still in the buy program, right? Coming into the latter part of December, right? And we had switched to a sell program going into the latter part of December last year. So right now we're it's inverted right now, right? It's inverted right now where these in November, right? November, we manipulated out sell side. And last year, December, we manipulated buy side and switched to a sell program, right? So we manipulated out sell side and switched to a buy program, right? So right now, that's one thing that's looking good for the Santa Claus rally. Do we have to get it? No, but based off of what price is doing right now, right, it's showing a respect for the buy program on the daily time frame, right? Still showing respect for the buy program on the daily time frame, not showing the desire to want to break down, right? Showing respect. Based off of last year, we had already switched to a sale program mid-December, right? So going into the latter part of December, what do? We continued the sale program, right? Then going into January, moving to the latter part of January, going to February, continue, right? Okay. Okay. Quick look comparison between last year and this year. Let's see how it play out. Like we say right now, it's still respecting the buy program on the monthly, weekly, and daily time frame. All right. We gapped up, got a bullish new week opening gap. Bullish new week opening gap. Buy program is very much still intact. Our previous 20-day look back. Right, this was our previous 20-day look back. Let's see if it needs any updating. If I go 20 days back, nope, still the same, right? That's the lowest low. If I come here, right, to the 20-day, right, stretch it down. That's the lowest low. That's the highest high for our 20-day look back, right? So that's our 20-day look back right there. Based off our 20-day look back, we had pointed out discount PD arrays that we were watching, right? Our bullish order block, right? We're getting nice discount sensitivity off of our bullish order block. We picked this out as our discount PD array to watch for our look back. We was looking at it for 20-day, 40-day, 60-day, but that was our 20-day look back. A nice retracement down into it. Nice discount sensitivity thus far, right? This is our liquidity pool on the top side, liquidity pool on the downside, right? This is in a buy program. That right there is the draw until proven wrong, right? Nice discount sensitivity there. Now that we're seeing discount sensitivity there, we have an order block here. If we get back above it, we'd like to see that use that support, but we're not above it yet. So waiting on that, right? But getting back above this, want to see that use that support if we get back above there. Now, right now, what we are watching, we watched this before, we were watching this before, and we want to see this daily SIBI become an an inversion fair value gap again. We don't want to see it be used as a reclaim. Right now, it's not being used as a reclaimed fair value gap. We still have not closed above consequent encroachment. So it still very well can do its job. Why am I saying it? Because we've come up above it, right? We didn't use it as an inversion here, right? We traded back up into, well, we didn't even make it there. We didn't make it to that one there, but we came up and made relative equal highs. I was looking to see if we traded up into that SIBI, right? But we came back up, created relative equal highs, then dropped back down and closed below it, right? And then used it as a reclaimed fair value gap to send us down into a discount, down into our discount PD array where we was looking for price to give us discount sensitivity. Now that we're coming back up, right? We want to see this become an inversion again to support the bullish narrative. Why are we watching this? One, because it is the first SIBI that was created before we dropped down and manipulated the lows, right? Number one. Two, it is confluence at our upper quadrant. Remember, we look for trading opportunities at the quadrants, looking back for confluence at the quadrants, right? So this SIBI is intersecting this quadrant level. So it was wanted to be an inversion. It didn't use it then, got down and used it as a reclaim. So now if we come back above, now we want to see it be used as an inversion, right? Because it's the first one before coming down and then come back up, getting out, changing the state of delivery, right? Got relative equal highs resting up here. Okay. So watching that, want to see that become an inversion fair value gap. We have a volume imbalance slash new day opening gap here. Yes, new day opening gap slash volume imbalance right up there, right? Want to see price below through that, right? Understand that it's there. Price could trade up into it and back off it a little bit, especially trading up into it and backing down and using this as support, right? So want to be aware that that's there, right? Go up, come back down, use it as support, and go up. Okay. Relative equal highs here, then all-time high there. All right. Right now, it's pretty far away to go back to the all-time high. That is almost 1,000 points. That is,
Hey, Tim,
yes.
question. If that SIBI does become an inversion again, since would it still represent a long opportunity since it's in a premium or at least above equilibrium?
Yes, it's going to offer a long opportunity because it's not going to be looked at as being in a premium, because it's like all of this down here is efficiently delivered. So it's like prices moving up, right? So now we're not continuously looking for price to come all the way back down here again, right? It's like we're slowly making all of this efficient. So this ain't gonna be in the premium anymore. You understand what I'm saying?
I got you. Yeah, I understand. That makes it crystal clear.
Yeah. And because whenever you see a bearish PD array, right, in the premium, and now we've come and done something, right? You want to see that bearish PD array become an inversion, right? Because now all this down here is very efficiently delivered now, right? So when we start to leave this area, right, if you think about it, all of this here is going to be a balanced price range, right? Because we got sell side delivery, buy side delivery. So once we start to leave this, you don't want to see price digging all the way back down here, right? If we drop back down and kiss that, yeah, that's fine. But you don't want to see price coming way down, you know what I'm saying, for low resistance. Just like any other balanced price range. Once you get up there, you want to see it touching and go. All right. So we're not looking
I
at
got
it
it.
as, oh, it's in a premium now. No, because we've already, you know what I'm saying? We've already done the algorithm has shown you stuff down here. Okay, boom. That's efficiently delivered. Right.
Okay, that
So yeah. So keep that in your mind. I'm gonna mark that and just hide it. What is that? 13th October. 13th of October. All right, so just gonna put this in here. What is this? Oh, I forgot I had made some. Oh, this stuff we was looking at when we was doing the what's the name, I think. Yeah, when we was just talking. I'm like, what in the world is that? All right, so put that in there and then I'm gonna hide that. Okay, so daily. Um Also, if you want to look at areas of concern, right? If you want to look at areas of concern, not only can you watch the quadrants of that SIBI, right? You can also watch the quadrants of this wick right here, right? If you want to look at areas of concern, what I mean by areas of concern is because but we're moving bullishly and we're coming up into premium PD arrays, right? These premium PD arrays, meaning price PD arrays that's above price, not just in premium, right? I appreciate that, Derek. If you're still in here, I appreciate that. Same to you and your family, right? Um, you're looking at prices coming up, right? So you want to see how price is reacting at these quadrants coming up, right? For the buy program, you want to see price, right? Stair step it way up through them, right? Want to see price stair step their way up through them. Tim, why did you drop down at the upper quadrant? I got to the upper quadrant and I gave it the opportunity to come manipulate out some sell side, right? Because why? When we get to the upper quadrant or that lower quadrant, what do we get? A lot of times a deeper retracement. That deeper retracement does what? Manipulate liquidity, right? That's why I drew it out like that. I can't help it. My brain just do it. I'm just used to looking at it like that. Okay, so we're looking at opportunities for we're looking at that. And the reason why you're watching that wick there is because that's the wick that did the most damage over here. Came down. Right. And we're coming up into it. All right. So you can watch that wick from the 11th of December, right? For areas of concern. And you can watch the quadrants of that SIBI from November 13th for areas of concern, going trading up into, right? And also for the bullishness, you want to see it stair step its way above those quadrants. All right. All right. That's about all I do for my weekend chart prep. Right. Mark out my liquidity, look at any key PD arrays. And then once I get into like the New York session, then I'll start looking at like intraday PD arrays that support or invalidate my higher time frame thesis / bias. All right. Anybody got anything for me? If y'all ain't got nothing else, y'all free to go. Just gonna do the finishing touches on getting all my lines together. Allowing y'all know I like to have my lines on the exact candle down to the 1 minute time frame. Right. I think Apex still got 80% off sale right now. It's like the second or third link in the description below. Got an Apex affiliate link. Shout out to everybody that's been using my affiliate link this month. Y'all been going crazy on it because Apex had 90% off sales and 70% off sales. Got the PA fees discounted up until midnight on the 23rd. $65 for PA fees for 100K or below. I think it's 125 for the bigger accounts. Oh, I need to set my new week opening gap. I'm glad I came over here. Set my new week opening gap. Clone this. Clone. What's tomorrow? The 16th? No, tomorrow's the 22nd. I'm talking about the 16th. Tomorrow's the 22nd. I was looking at the 15th. Right there. 22nd. All right. So we closed out Friday here. We opened up today here. That's 99. 99. So coordinates. We're gonna put this at 1:15. It's the Christmas week. We all should just chill. Hey, appreciate that, Sage. Sage said, y'all chill. It's Christmas. Just chill. Sage said, just chill. It's Christmas. 657. 25, 597, 597. 26, 657.25. Oh, it's 25. I got 26 there. 25. There you go. Sage said, chill, y'all. Where's G Rock? You have it in the close, not the open. You have it. Say what? You have it on the close and not the open week of the infamous Christmas rally. Oh, yeah, you're right. Tweaking. Appreciate that. I would have saw that later and be like, why do I got that anchored here? Appreciate that. So that's the new week opening gap right there. And I had just said we barely had any lower wick. So if we would have opened up there, the wick would have been much longer than that. But I'll be doing that all the time, man. I'll be like, wait a minute, why do I have that anchored there? Appreciate that, J Rock. That's our I didn't mean to do that. Let's see what this week bring. Right side of a market maker buy model. All right. On the right side of a market maker buy model. All right. We've traded back above these highs here. So on a lower time frame, all right, we've completed that market maker model. there. Y'all remember what we say? We have these models inside models inside models. So right now, we always watch this, right? We have that one there. Boop. Right. We have that one there. Boop. And we have the overall model there. Right. We have market maker models inside market maker models inside market maker models. Right. This right here is the overall market maker model right now that's being traded from the higher time frame. Right. And remember, we talked about on our monthly time frame, we had came back down to a discount, right? Swept liquidity, then start going back up, right? As part of that overall higher time frame market maker buy model, right? We still trading it out, right? Come back here. Because sometimes you just have to show people. Sometimes you got to pop out and show people. All right. So now see right there. See what we said, we got a retracement back down into the discount. We got our sensitivity. Then we went back up. You know what I'm saying? There we are there. All right. See? All right. Now y'all can see if we go to back down. We was on the 60-minute time frame. All right. Okay. See that? Did you see it? Did you see it? Did you see it yet? Ooh, my secret. All right. Have to train your eye to remember what the higher time frame looked like and look for what we go down looking for what? We go up for narrative and down for what? What we go down for? Who remember? Up for narrative and down for details. Very good. Very good. We go up for narrative and down for details. Oh, that's the wrong. I'm like, wait a minute, that's the wrong contract. I'm like, why ain't nothing printing? What you see there? It's the wrong contract over there on the ES. That's what I was talking about before. When I was talking about you can't trade it after that. You see that red thing, that contract expired for those who ain't never seen that before, but contract expired. There's no trading going on that contract now after Friday. You can't use that contract after Friday. Right. So there's no trading there. Now we come back here and now we got trading, right? Then we look at it, the days even look different, right? There was still a little bit of trading going on that old contract, but when you look at the contract that we was already switched over to, the days even look different. Friday looked totally different. Thursday looked the same, but Friday looks different, right? Did you get it yet? Get it yet? Get it yet? Get it yet? Get it? Get it yet? Building on a shake. Do a double take. Did you get it yet? Get it yet? Ooh, my secret. Oh. Did you get it yet? Get it yet? My secret. Did you get it yet? Did you get it yet? Did you get it yet? Get it yet? Get it yet? Get it yet? Get it? Get it yet? The Dow is not up there like the ES and the NQ. The Dow is still inside Friday's range. Way down here. Divergence already. Haven't even taken out Friday's high. And the ES and the NQ are well above Friday's high. Terminal midnight line. Inside that hourly inversion on your intraday time frame, right? Just like we watched on the higher time frame, this inversion fair value, this right here, but not it's not inversion yet, but you're watching for the bullish narrative. You're watching this to become an inversion fair value gap. Why? Right? This is the first SIBI that was created when price dropped here, swept liquidity. Right. So now that we've come down to a higher time frame PD array, we've come back up and got a break in market structure. Now, on the intraday time frame, on this hourly time frame, you want to see this become an inversion fair value gap. If you want this to act as a SIBI, you see here when we were going down in the sale program, see how we defended the upper half of this right here. That's what you want to see when you want the bearishness to ensue. Now that we want it to be an inversion fair value gap, you don't want to see us defend this portion. You want to see on the hourly time frame, price just march its way up through here. And then once it get up there, then you want to see it defend the lower half, preferably hitting this upper quadrant and going, or just getting the institutional order flow entry drill and going, right? And mind you, anything that doesn't fill this up is an institutional order flow entry drill. But the lighter it touches it, the more convincing that institutional order flow entry drill is, right? So now that we've come and done something, hit a discount PD array, swept liquidity, now you're watching these quadrants and you want to see it stair step its way up and then use it as an inversion fair value gap on the hourly time frame, right? Trading back up into these relative equal highs there, completing that market maker buy model there, right? That's inside of this market maker buy model. That's inside of this market maker buy model. All right. Okay, doke. And that SIBI is from 10 a.m. Friday New York session, right? Remember what we said about time and price, right? That's a SIBI created during a kill zone, right? A very specific time created a SIBI that did a very specific thing, right? And then now we're coming back up, right? We're coming back up and right. That SIBI, right? It's right there. It's touching that quadrant and it's touching that quadrant there, right? So for time, 10 o'clock, New York kill zone, right? This low is created, that high is created. So we're looking for trading opportunities from this way forward. And we're looking back for things to support it, right? So now looking back for things to support it, right? When we come over here, this SIBI would be a part of a bullish order block once we get back up here, right? And we're reclaiming that bullish order block, right? We're coming to reclaim that order block. We're coming to use this as an inversion, right? And it's in confluence with that quadrant level right there. So we're looking for something to form over here to trade off of in confluence with that, right? You got quadrant levels inside of that SIBI, right? So right now we're starting to push up into the upper portion of it, right? We want to see it continue to march through this to create an inversion fair value gap to support the bullish narrative, right? Well, Tim, what if it starts to pull back? No harm, no foul, right? You got to give it time to move because why? We got a whole inversion fair value gap right here that's resting in line with that quadrant right there, right? Price can pull back down into that if it want to. We just broke out of a range right there. Where's that resting at that quadrant in line with that right there? So if price want to pull back down, so what? But if it doesn't, you know what you're looking at, right? Know what you're looking for. Having validation points, right? Certain things you don't want to see, right? We're leaving this area here. Algorithm saying, okay, this is a balanced price range. Don't start coming all back down here, right? Can it do that? Yes, it can. Wow, the Dow looking heavy right now. If you want to make a deeper retracement, guess what we can do? We can come all the way back down here just because, right? Why do you say that, Tim? Because this right here, what is that right there? That's an area of accumulation, right? We're leaving an area of accumulation, right? If you come over here, and it's this little thing called the OTE, right? If you come from when we're leaving this area of accumulation, I got it backwards again. I'm sorry, y'all. Right? Go to the highest body that's formed as of right now, right? And we come right here, right? Right? If we come back down there, right? We got like us an OTE that can come right there, right? And then we got an area of accumulation right here, right? Because this is just coming from there. We never came back, right? So once we came leaving this area, right? This right here would have been like the highest body right here, right? We never came back. This right here is for the overall range, right? OTE will bring us back into this area, okay? And then if we look at leaving this area of accumulation that we never came back to, right? Right now, OTE will bring us back into this area right there. Why? Because we're leaving this area of accumulation right there, right? And this is based off that 1 hour time frame. Okay, so either way it go with like looking at just trading back based off how you run OTE based off this accumulation area or that accumulation area, pretty much bringing you kind of close to the same area, right? Back down to there. Okay. And then if price is really bullish, you're not trying to see these PD rays be lost because the algorithm is showing you I want to go through. Just like here, how we're watching this SIBI here, saying we want to see it march through, right? Same thing with that one. That was the first SIBI that was created before we dropped, right? What do we do here? We marched through it. Then now we done popped up and went up there because we moved it's the same concept. We move it here to there as price was coming back in, right? What do we want to see? We want to see price cut through and then defend the lower half, right? So we went up to the top, we dropped back down, right? Pushing above it, right? Dropped back down. Then we went up to the upper quadrant there. Then we dropped. Then we started defending the lower half here, right? Drop back down, right? Then got to the top and closed. And then the day we gapped up away from it, right? Showing that it was exceedingly bullish. We just ran out of time right here. Exceedingly bullish. So just looking at this as one big green candle right there. Right, that's how you think about it in your mind. One big green candle. Yeah, we got a volume imbalance there, but price was bullish. And so it was intended on just continuing up. Right. Now that we've gotten there at the buy side, right, created a down close candle, right, and price still trying to move up, right? Buy program still intact, still going strong, but it did the same thing it did here. You're watching this for the same reason, right? Now we're back above consequent encroachment there. Pause that consequent encroachment, right? Want to just see it continue to march up and go. Just like here, we came up, came all the way back down, came up, and then started defending the lower half, right? We'll say we can't do the same thing here. Come up, come back. And if we come back down, what do we come back down to? That OTE. Remember we talked about that, right? If we come up here above consequent encroachment, if we come all the way back down, right, then go back up, just like we did over there. Okay. Just playing the what if game, right? Because I say, hey, Tim, what if it pulled back, right? Okay, what if it does, right? We came up here, went through it, right? Came up above, came up to the upper quadrant, right? Actually poked the high, then came all the way back down, just below the low, right? Then we traded into the Bessie, right there. Then traded up above halfway there, right? To the high, closed above the upper quadrant, defended the lower half, defend the lower half, defend the lower half, start to leave, continue to go. Right. So now over here, now we're coming up. We went to the lower quadrant, right? Went to the consequent encroachment, right? Still moving up. Just say if we touch the high and then come all the way back down, right? If we touch the high, come all the way back down, right? Remember, we was talking about if we went for this entire range. I did it again. Oh, no, I didn't. I did it right that time. Oh, I had it backwards last time. Okay. So I had it backwards last. This the right way. All right. So this the right way. Right. Ignore what I said last time. Right. So right now, right, that's the highest body there. I thought it looked kind of weird, but I was like, hey, that's what it is. Right. OTE can bring us all the way down there. Right. And then for this one here, right, where we're going so far, if price, right, if price extends up, then we come back down, OTE right there. If we went all the way up, if we went all the way up to the high and then come back down, right, let's just say we went all the way up to the high, so the body will be a little bit higher. Let's just say we went all the way up to the high and the body was there, right, and we just poked the high, came back down to OTE zone right there inside a new week opening gap right there. That'll bring us back down, deep OTE back to the order block, right, bring us back down to the lower quadrant and go back out. But it's the same thing, stair stepping out of there. Why ain't nobody told me I had the thing backwards on there for the OTE? Y'all supposed to be like, Tim, you got the OTE backwards. I had it like this, right? The numbers all upside down. I had it right the first time. I said, oh, I got it backwards, and I flipped it. And I had it right the first time. But with OTE, you go body to body, right? When you're leaving an area of accumulation or distribution, right? So we're leaving an area of accumulation or distribution, body to body on that area to that left. We never came back on this expansion. So that's looking at it across the entire expansion. And then looking at it for this being a balanced price range and leaving this area of accumulation right there, right? Brings us back down. OTE brings us right back into the order block, into that quadrant level right there from right now where it is there. For those that don't know how to run your fib for OTE, right? It's more that go into it, but that's just the meat and potatoes, the gist of it. Okay. All right, man. Appreciate y'all for hanging out with me. Those that stuck around. It's been so long. I need to get back at it. Classy Mom B. So good to see you, lady. Shout out Classic Mom B if you still in the building. Yeah, have it. Says you got to get back at it, man. Get back at it, man. These charts ain't went nowhere. These charts still out here paying people, man. Come on back through. Come on back through. Throwback gang gang. Throwback gang gang. Hey, man, that's all I got. Shout out to everybody that stayed here with me, man. It's 9:44 on a I'm here. Some of this ring a bell. I almost like She said some of it rang a bell, almost like riding a bike. You ain't pushing them buttons no more. You ain't out there pushing them buttons no more, making no money in these mean trading streets. You ain't pushing them buttons no more. Man, got to get out here and push them buttons, man. Push them buttons, make a little bit of that money. I had to pause because my account. Yeah. We all done did some things to our account that make our account want to call a divorce lawyer. Ain't nothing, J Rock. Hey man, that's it. That's all I got. Appreciate y'all for hanging out with me. Tomorrow is Monday. Diamond members, we're gonna do a what's the name? A pre-market analysis. It's Christmas. Wednesday is Christmas Eve, holiday. Thursday is Christmas. So y'all already know we ain't gonna have no tape reading session this week because Wednesday is the holiday. Our tape reading sessions usually be on Wednesday, but Wednesday is a holiday. But we will do a pre-market analysis on Monday. I'll probably do one Monday, Tuesday, and Friday this week. Since we ain't gonna do no tape reading session, I'll do one Monday, Tuesday, and Friday. Instead of Monday, tape read and Wednesday, and then Friday pre-market, we'll do one Monday, Tuesday, and Friday this week, since Wednesday and Thursday are holidays for the New York session. Seawalk, what's up, Seawalk? Seawalk wasn't over in the Discord with us today. That's you, Water? Oh, what's up? All right, man. Till the next time I decide to get on Al Gore's internet and share my thoughts on this thing that they call price action. It's your boy Timothy Lee Rogers, aka Rania Grande. Y'all be safe out here in these trading streets, man. Gone.